Hey everybody, how's it going? It's Thor Young. I'm a moderator with Bear Bull Traders, and I am here to do a recap for you specifically on using Camarilla pivot points. Now, I'm getting a lot of requests for these. Camarilla pivot points are by far one of my favorite indicators to use for gauging ranges on stocks and where I'm expecting things to happen. I got a really nice trade on Apple today in a market where there really wasn't a whole lot going on that really just grabbed my attention. Apple ended up kind of being that saving grace for me today. Apple fortunately does have the ability to make some moves even on non-catalytic days. And since I didn't have any stocks that were in catalyst that I really liked, I really wanted to keep an eye on this. But in order to trade these, you really need to take your time. You really need to let them set up properly and then take the trade based upon what you're seeing. So I'm going to go ahead and go to the charts now. Before I do, if you have a moment, throw me a like, subscribe to the channel. You'll see what we got coming out. But anyway, enough of that. On to the trade. So you can see here Apple. So I'm using multiple pivot ranges here now when I'm trading. I'm not only just using my daily pivots like on my intraday, but I'm also using my daily pivots. So one thing that I've noticed on Apple yesterday, if you come down here to my daily chart, you'll notice that yesterday we went up and we tested R4 and then found ourselves in a hard rejection of R4 yesterday. And that's very interesting to me. Whenever I'm looking at R4, depending on the time frame, what I'm thinking, as I've explained in other videos, is I'm kind of thinking of this rubber band that's being stretched. And with the cam points, the R4 is kind of the extremity of that rubber band. After it breaks, you tend to go in transition in search of a higher value. So you can see here we rejected that attempt to stretch twice. Look, we tried to break on this prior session. Yesterday's session, we opened there, but immediately sold off a good portion of the day before buying up off of R3. But then you can see here today we open ourselves when we find ourselves pulling back to 156 and then kind of stuffing and moving lower. So over to the 1 minute chart. Now, in a very similar way, you can notice I have R3 here. So when I'm playing what we like to call an inside day, which is a day where the cam structures are a little wider, so we're looking for the stock to kind of just range inside of the cams versus breaking out, like leaving R4, we're going to look for shorts around R3, and we're going to look for longs around S3. And then we're going to try and play the traverses back and forth through the daily range. On choppy days or days with low volume or days where you don't have a specific catalyst stock, this strategy will help you so much and save you time and time again. Because basically what ends up happening is because you're waiting for R3 or S3, you're going to be buying or selling at an extreme. Right? So instead of getting into the middle of the action and be trying to play the smaller moves up, in lieu, you'll actually wait for the stock to get to a top or bottom, and then we're going to play that extreme all the way back down. So you can see here Apple opened, and when Apple opened, it shot straight up really, really fast, and when it hit here, volume came in. Now, this is really, really important to pay attention to. Okay, when you're trading in the opening range, where your volume comes in is highly critical to how your stock is going to trade. You can see here the volume didn't come in down here, it came in up here. Why? Because look where our VPOC is, our volume point of control. And I saw on the tape, when it got up to this top level, a lot of selling. So I thought to myself innately, we got a fast pop, right? And then a lot of selling once we hit that area. That to me seems like we're getting into a high selling area, high sell zone. The market maker is likely starting to distribute out. I'm actually going to expect things to go short off of this. The only confirmation I really need is I need the volume to kind of stay mid-level to high here, but not have a real big increase as we push or too big of a decline as we fall. And one thing I noticed is we kept staying right in here, but we kept getting pushed right back down to that 155.80 level over and over and over again, and it created all these topping tails here, right? Then we finally break through, but when we break through, we don't get a lot of volume to come in. We don't have, the tape doesn't show a lot of green coming in on the large side especially. We kind of push a titch, but we really don't make it very far before we push over and we pull down and we draw down. This candle we drew down really fast. We pulled back up to VWAP, and once that happened, I'm under R3. I've rejected an attempt to break through R3. I now find myself under value, right, and poised to lose VWAP. Now, fortunately as well, when I look to the downside, see how 155 here is holding some large bids on the level 2? Well, that existed in this scenario as well. So as it started to break down, I saw these larger bids to the downside, so I went ahead and took my position short, targeting those bids, and I got good partials. Boom, 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 all the way down. When we pulled back to previous day's close, I went ahead and added in there for a short. My stop was right under 156, right in there. I ran a little bit around a 10-cent stop, so I was able to get around a 20-cent move to the downside for my partials, and this one got me to goal. Now, after this, because of my ad, I averaged in a bit, and I went ahead and took the rest of my position off at the loss of the moving average. Looks like we still may move through, but once we've moved back through these moving averages, I feel like we've lost momentum, and we're probably not going to trend well. Better just to take the rest of my profit off the table there than to let this continue coming back up to break even. So I'm all out of this position and not going to be getting back in. Fortunately, I did make it over goal on this trade. I also had a trade on AMD at the open. As I bought the break, we got a really nice pop. I got 2-1 on that one and then stopped out at break even. So between those two trades, I find myself at around 5R, 5.5R today. My goal only being 3R. So that really, really works out. So I hope everyone can learn a little bit of something about this. If you have any questions, please comment below. I'll do my best to answer for at least a day or two after this is posted. After a while, it gets a little difficult to keep up, but I'll always do my best. I hope everyone enjoyed this. I'll look forward to those comments, and I'll talk to you all later. As always, y'all, keep it green. Thanks.